Welcome to Markets Now. I'm Michelle Rook with Mike Zuzulo, Global Commodity Analytics. A mostly lower day in grain and livestock futures trade with a few exceptions, soybeans, and I believe Minneapolis wheat. And Mike, let's start off with the corn market. Of course, up 4 days in a row. So did we hit some chart resistance and see some profit taking, or what was weighing on the market today?
Yeah, I do think we hit some chart resistance, Michelle. There's a downtrend resistance trend line in the daily chart, is DEES daily futures specifically. You have that August high that we're trying to get towards. We've been able to take out or to the July highs. We've been able to take out the August highs in both the soft red wheat and the corn. The July highs now kind of within earshot here. The other thing I think the trade's starting to hear about is more harvest, and I'm hearing that as well. We're getting more reports of both beans being cut and corn being shelled. I had heard some central Kansas corn being run at 16% moisture. So between that and some Illinois and Kentucky producers that I work with, both of them running, this is a market we're running 2 to 3 weeks early on harvest. And I think that's going to be one of the headwinds that we're going to have to face here, especially heading into the WASDE report next week until we find out some concrete yield numbers.
And farmers probably doing a little selling here on this uptick. We haven't had these levels for at least a month.
Yeah, I think that's right. And I think especially in the corn market, we probably saw a little bit more selling. The beans seemed like they were getting moved very eagerly late last month, as the market started to give way. Now with this turn back higher in the corn, it seems like farmers and the farmer selling is more attractive here.
Right. Corn may be following wheat a bit here as well, but did those markets both see kind of a little bit of a currency play, in your opinion?
Yeah, I think so. I think especially in the wheat. We've talked long enough about the wheat-led market, especially for the corn, and the wheat did lead us out. And I still think wheat is the answer to the ultimate low in these grain and oilseed markets here as we get ready for the U.S. election and get ready for the next marketing year, the next calendar year, I should say. But I think the ruble market, that Russian ruble had a 5-week high against the U.S. dollar. I think that really helped the soft red wheat take us from a 4-year low in the month of August up to closing higher on the month. And so we really have a nice staged longer term chart as it stands right now. And I think the corn's playing with that. Also, I think the corn's probably playing with the South American weather. We're already hearing chatter that if this goes on too much longer in center west Brazil, as far as the drought, we're probably going to lose corn acres to soybeans. I'm part of that group that believes that. It's early yet, but another 3 weeks, we could be talking about that quite a bit.
So the South American weather issues that you're talking about, that's been part of the support we've been seeing in the soybeans too, right?
I think so. Yeah. This is where I think the top two leading movers to turn this market was the wheat and the currencies, as you say, and as I agree with. And then also what we've seen in U.S. yields. I think the trade came out of that August WASDE report saying yield's going to get bigger, crop's going to get bigger here in the United States. This dry weather pattern is pulling that back, and we're pricing tighter yields in at this point. That third factor, that South American weather, I would say is in the market, but it's a minor player right now. It's minor because it's early, and it's minor because we'd have a lot more price action on the upside if they were taking it seriously. Because some of the charts and indexes I look at is we're about 2 standard deviations worse in terms of corn stress in the South America, Brazil, Argentina areas than we were a year ago at this time. So it's a significant issue. We've heard a lot more about the Mississippi River having trouble in Vicksburg. We're having just the same amount of problems, if not more, when it comes to some of the big rivers in Brazil in terms of getting product moved to export markets.
Right. So how long does it have to stay dry in Brazil and some of the South American areas before the market does really start to notice it? Like you said, we don't really start planting soybeans here till mid to late September, right?
Yeah, I think 2 weeks from now, we'll get some good idea of where we're at on the soybean crop, at least the early soybean crop here in this country. We'll know if we've been dry in Brazil for 10 days, and we'll be able to look out 10 days. So I would say as you get towards the end of September, I think it'll be probably the number 1 or number 2 factor, along with that currency and the Federal Reserve meeting, which that again is coming up. We have a lot to deal with between now and physical harvest.
Absolutely. And we shouldn't forget to talk about, since we're talking about soybeans, part of this rally has been built on some better China demand. Do you think it's going to keep coming at the market? We keep hearing rumors of more business than what we have seen confirmed anyways.
Yeah, we're not badly priced against Paranagua right now, maybe $10 over Paranagua pork price. So if they continue to have a drought in Brazil, I could see China coming more online with us. Two things though, the Brazilian currency is way too weak against the dollar, in my opinion, and the Chinese economic data is just not performing like I wanted it to. And so I'm getting more concerned about a double dip in China. And that means soybeans and hogs are two of the leading indicators or leading commodities that could be hurt by that. So I am more nervous about the soybeans. And keep in mind, we still have that big rolled supply out there from last year. And even if we trim our yields a couple bushels, we're still probably going to have about a 350 carryover, which is very manageable.
Yeah. Mike, do you think we're going to see normal harvest pressure in corn and soybeans, or because we were so much anticipating such a big crop, did we put in an early harvest low or not?
You know, if we didn't have low river levels, Michelle, I think the weather has dried us out enough that the test weights and the finishing of the very variable crop, the stuff planted mid to late May and the soybeans getting planted late in many areas, I think we could have been past our harvest low because of the situation we're facing being 3 weeks early on harvest. But low river levels really always bother me, especially during harvest. And the Federal Reserve, if I'm right about wheat leading us and that being a lot about currency, the U.S. election and the Federal Reserve would suggest be careful. That dollar may become a safe haven bid again.
Right now, are you suggesting producers do some pricing on the uptick that we have seen off the lows here, Mike, or should they wait or what?
Yeah, the August highs are the next place to go in the lead month bean futures around 1045. I'd like to check that. I'd like to see the wheat try and give us one more move to the upside. I'm not sure if I'm going to get that kind of energy generated though, Michelle, before the WASDE numbers come out. So I might have to play it very close to the vest between the WASDE numbers and the close next week as far as making more sales. But beans are number one on my list for the recommendations to let go of.
Cattle market had a tough technical day. Was it all technical? I know we had some lower cash trade. So how concerned are you about this market?
I do think it's mainly technical because I think it's mainly fund driven. Having said that, I think we're searching for demand and consumption, and I think the funds are doing that as well, not finding any fat cattle bids that you can really rely upon. And as a result of that, we're starting to see the funds look more towards the consumption side in terms of how does it look in terms of the equity markets, the stock market, the economic data. And without the feeder cattle support that we've had pretty much the last 2 years, I do think the funds are more willing to sell if the technical suggested. And we are getting on a monthly basis in very dangerous territory. We're right up against eating into an uptrending channel on the fat cattle monthly chart. And we've been able to take out the last month's lows in fat cattle. Same thing in the feeders, except feeders even look maybe a little bit worse to me, more like a true double top formation. So we really got to pull some market price action together here. I really would like to see fat cattle turn higher because USDA in their last WASDE report had Q3 steers at 190. That's essentially where I'm at for my value levels. So we should be going higher here relatively soon.
If we violate the chart points that you talk about, how much of a downdraft could we see there?
What I've noticed in both 23 and 24, whether you're looking at corn or cattle, is funds tend to play a 7 to 15% move. And so that's what I kind of bake into the cake if I lose something big on the charts is, okay, we could be down 7, we could be down as much as 15% on a fund-led drive.
And a couple down days in the hogs after what was a really nice rally. It looked like the funds were piling into that market. Is the rally over? And are you concerned about China's economy maybe weighing on that market?
I am concerned about China a lot, especially as we get into the new year. Right now, pork exports are strong. The Chinese Dalian futures are strong. The cash hogs in China are strong. The cutout here is relatively strong as well. I think we're pretty fairly priced right now, Michelle, but that also means you probably need something new to take us higher. And it's going to be hard, I think, for the hogs to go much higher at all if we see the cattle market continue to liquidate. You'll see some spread trade, but you'll notice the retail prices for chicken and pork are really coming in strong in terms of dragging consumption away from the beef side.
And you mentioned the stock market, is there some long liquidation out of there and maybe some cashing out of positions in greens or anything like that where they're short in any given day, some unwinding or anything?
Yeah, I think so. I mean, I don't have a stockbroker's license, but I sure have to watch it. And my take right now is it's all about the election and who wins and who loses, and whether the currency markets and the international trade geopolitics get negative, and that then spills over into Wall Street. So if we have one more big move up to the upside, I'm going to bet it's probably because the dollar is getting bought, and all of a sudden we see the commodity rotation move out of commodities back into stocks.
All right, thanks for joining us, Mike Zuzulo, Global Commodity Analytics. That is Markets Now.